All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Jumping on just a little bit early here. We'll go take a look at the challenge in about 10 minutes. But today is Fed Day. We just had the Fed rate decision, and as we talked about, the market had priced in. We got the 50 cent, or excuse me, the 25 cent cut there on rates, and not a whole lot of real change when it comes to the language. They talked about the business spending being soft, the typical world monitor, blah blah blah, and there were two members of the Fed that did prefer an unchanged rate stance. So they basically said no, we shouldn't cut rates. So I'm suspecting that's why we saw the initial downside reaction to the market, that algorithms were kicking off on that. But we still have the Fed press conference here in about 10 minutes. So that's still to happen. If we look at the range on the market since the Fed decision, we're looking at about a 13-point range. Now this is a lot tighter of a range than I thought we could have. 13 points is pretty flat. This is a I should say very flat reaction because it can always continue here, but at least so far it is a very muted reaction here to the Fed. Even the volumes are relatively muted. So, if we look at how S&P futures are pushing some of their recent ranges, now they simply aren't. Right? And the S&P futures are pretty much where they were yesterday. They were here on Friday. They were here on Thursday. They were here on Wednesday. We're just slightly higher than Monday and Tuesday of last week, but we're sitting where we were Friday the week before that. We're not talking about anything where, if you were to look at this chart, the 1 hour chart on the market, you go, that's the Fed right there. There's not enough movement for that, here at least so far. And again, Fed reactions, they used to be, hey, the first 15 minutes and go. But over time, we've seen Fed reactions kind of encompass the last hour and a half of the trade for any given day and the first hour the next day. And I do expect that will be the case here. This time around. So anyway, that's the Fed. Now I was asked this morning, because I mentioned we could have some volatility. I was asked about what drives this volatility, and the question came in and basically said if there's a buyer for every seller, or a seller for every buyer, why would prices move so fast? Are buyers and sellers really going at it, that quickly? And it's a good question, but when it comes to the market, it works a little differently than real life situations, right? When my wife texts me and says, hey, pick up some bread and milk on your way home, it's one of those where I go into the grocery store, right? I walk in, I look at the bread, I look at the milk, I grab it, and I go up to pay. When I get to the register, I don't look at the cashier and go, you know what? This milk is going for $3.50 a gallon. I'm willing to pay $3.25. Will you give it to me at $3.25? Right? If I did that, she'd look at me like I'm nuts, or he would look at me like I'm nuts. And then I go, well, this is the bread I really want, but you know what? I want it for 50 cents less. Can you do that for me? Right? She'd probably pull out, some sort of hammer and smash it and go, here, okay, now it's 50 cents cheaper. That's just not the way it works, right? And most of our buying decisions in life, and even our selling decisions in life, most of them are, hey, it's a fixed price. Do we want it at that price or not? But when it comes to the market, that just simply isn't the case, right? The market is a place of haggling. It's a place where there are assets with changing values at all periods of time. And it's a market where just because, let's take Apple, right? Here's Apple. It's trading at $217, right? there might be somebody out there, they're willing to buy Apple, right? They're willing to buy it at 217. There's somebody willing to sell it at 217, so a transaction happens at 217. But there are always people willing to sell above the price of the stock. You know, someone who says, I'm not willing to sell it at 217, but you give me 217.20, I'll give it to you. Somebody else says, hey, 217.80, I'll give it to you. Somebody else says, hey, 218, I'll sell it to you. Why aren't they selling it for 218? They're willing to sell it at 218, but why aren't they selling it at 218? Because nobody's willing to pay 218, so they wait. At the same time, there are owners of Apple stock down here willing to sell, or willing to basically go out and say, you know what, 216, 216.50. Okay, you know what, I'm willing to come in and buy more at this price, right? And so you get this situation, and we can see it on a trade grid, right? Let's come in here to a trade grid. Let's just put in Apple, and let's see. I don't know if I can make this trade grid bigger. All right, now a little bit bigger. But you can see in here from different exchanges coming in that, there's 7 shares being bid on at 216.95. There's some shares being bid on at 216.89, 290. You see this changing, right? The price at which people are willing to buy and sell continues to come in and continues to change. Now, in many cases, it's the market makers that are stepping in and willing to be a buyer or a seller. But you think about the market makers on a day like today. All of a sudden, they see a big sell order come in, right? And the market maker is willing to go out and sell you or and buy the shares that you want to sell, right? But you want to come in and you want to sell 1,000 shares at whatever the current price is. The market maker says, I'm willing to fill that. I'm willing to fill 50 shares at your price. But you know what? That next 50, it's going to be cheaper. I'm not willing to pay that much. The next 50, it's going to be cheaper. I'm not willing to pay that much. And so what happens when we get a market environment like what we have today, where there's a big unknown, market makers are not willing to fill prices with the type of volume they would be normally. Why? Because they don't want to get caught with their pants down, right? They want to make sure that they're covered, and that if there's going to be a big change in pricing, that they have that under control or covered, right? And so the market makers are going to they're going to be willing to fill prices, but they're not going to be they're not willing to stabilize the price with a lot of volume. So big sell orders come in, they're going to drop what they're willing to pay. Big buy orders come in, they're going to increase what they're willing to sell, what they're willing to sell shares at. And so that helps to drive some of this volatility, because the amount that market makers are willing to buy and sell decreases. And when we see things like the flash crash, right, we see a big drop in what the market makers are willing to buy. Market makers are just like, no, something crazy is happening. I'm not willing to step in and buy something from you when you're just trying to dump it, right? So they're only willing to buy a little bit, and when the sell orders overwhelm what's willing to be bought, the price falls very, very quickly. So when you look at something like Apple, and Apple today, and Apple gap up, right? It wasn't that there was a buyer and a seller that changed hands, or where Apple shares changed hands, at all these prices in between the gap. It's just that, hey, you know what? After that earnings report, the buyers were willing to pay more, and the sellers were asking more, right? And we see this happen all day, every day in the market. But when we have a news event, when we have some sort of shift, we'll see orders flood in. And when those orders flood in, market makers are not willing to support the prices the way that they typically do, and so prices will change, and that's what creates a volatility in the marketplace, right? And we don't see that at a grocery store, right? It's not like myself and 50 other people can go into that grocery store. We all want bread. We grab all the bread there is. We go to the register. It's not like the cashier is charging us more per loaf of bread, right? Charging us $3 for the first one, $3.50 for the second, $4 for the third, right? But in the marketplace, that's kind of how it happens. If everybody's grabbing bread, the price of that bread is going to go up at the register. And, we saw that happen with Apple, here this morning. And we see, that kind of go back and forth with, when we have an event like today, the Fed event. And, it's what creates some of that volatility. Okay. All right. Let's go take a look at the challenge. We have two positions on the board. We have Honeywell. Options were 201, which is about where it was this morning, 205. So 201. Here on Honeywell, stupid thing. It tried to go green earlier today. Has not been able to hold on, but it's not outside of parameters here. And then we have a Valero, which is at 330 here on the options. So a little bit of uptick there in Valero. And we have a $945 loss on Honeywell and a $945 gain on Valero. So, from a challenge standpoint, we continue to chop, and market continues to chop. Would sure be nice to get two going in the same direction here a little bit, but neither Valero or Honeywell are hitting stop levels. For Honeywell, the stop level's 172.33, and we are we're just under $1 above that. And then for Valero, the price target to pull some off is 88.49, and we're significantly below that, that level right here. So, they've both moved about 25%, just under 25%, one way or the other there. So not huge moves in either, at least just yet. Honeywell's just one where. We'll kind of see how it plays on out here. Would be really nice to see it kind of, drift a little higher into the close and then gap up tomorrow and go. Would be really nice to see that. We have been fortunate a few times with some of these kind of draggers here for the challenge, where the stock just kind of drags for the first couple days, to get that third day pop. But, we'll kind of see how that plays out. And then Valero, we saw Valero earlier today. It was up about 60, 70 cents. Then we heard reports of a refinery fire for Exxon. And, some of these refiners, they popped a little bit. That's what took Valero up to its highs of the day. But, even when you look at Valero today, it's not exactly a big day for Valero one way or the other. It's not a big volatile day, big range type day. And so, holding on to that for the challenge, we have a nice little ascending wedge pattern, bullish ascending wedge pattern forming in here, which is always nice to see. Sometimes with these patterns, though, you just don't know how long they're going to consolidate before busting out. Obviously, the algorithm, suggests the odds of it busting out higher sooner than later are higher. So, we entered here, or I entered yesterday. Some of you, kind of joined me with that. But holding on to both Honeywell and Valero. Now, there are no new signals on the board right now as things sit. Now, as things as this afternoon goes on, we're going to see some prices change, on stocks, and some things that aren't triggering at this moment could easily be triggering in an hour from now. Right? And this is something when we we were doing everything and putting everything together for the challenge algorithm. We said, these types of days are going to happen. Do we behave a little bit differently? And, we just decided for simplicity's sake, no, we won't. And so it does create a risk of miss. Where, something could trigger this afternoon, in an hour. And, by the time morning comes, there's no way to get into it. And we could miss out, right? But, the one thing with the market, anytime there's a miss, there's always going to be something else, right? And there's always going to be another trade. But, nothing on the board right here this afternoon for us to kind of go after for the challenge. If you look at some of the stuff that hasn't triggered, like Alcoa, right? 3-7 crossover almost every single day, but just hasn't triggered, and well, stock hasn't gone anywhere. We have stuff like American Airlines that had earnings and fell sharply one day, and then just kind of pretty much stabilized. You look at the put options. Some of the put options have actually gone down in value, even though the stock's a little lower. Apple earnings, but nowhere close to a signal. Now, I'm very interested in Arconic. If we get some sort of upside signal on Arconic. In fact, I thought for sure we'd get an upside signal, but we didn't. The consolidation risk was too high. We've seen it, continue to consolidate, but I'd be very curious and very surprised if the next 3-7 crossover does not equal a bullish signal. We have Boeing, which finally found a little bit of life yesterday, but on relatively low volume. Things like Alibaba, JD yesterday all had downside 3-7 crossovers, but just aren't getting downside follow through. Bank of America, nice reversal yesterday, but since we got out, pretty much stuck. Pretty much kind of doing what it happened. We jumped into Bank of America right back here. We were in it, got time stopped, and then it just kind of sat there for 3 weeks. We got back in, on the signal, 2-day move, kind of like before, and since then, the stock's just kind of been a little bit stuck there. Bristol, which had a nice little earnings pop, but since then nothing. Caterpillar, which had an earnings drop, nice little rally, but this is something that could trigger bullish on a 3-7 crossover to the upside. Be very curious to see. We talked about Caterpillar after earnings, and it's a stock that could be at 160. It's a stock that could break 100. Depending on what happens, I think it could be a big mover this coming quarter in multiple directions. But ConocoPhillips, we saw a lot of reversal in some of the energy names yesterday. The Halliburton, Schlumberger's, Conocos, getting a little bit of follow through. CSX has an upside crossover here to it today, but this is one who is now trading near the low side of its range. Just like right back here, it had a 3-7 crossover, but didn't trigger bullish because trading near the low side of its range. So, this is just a handful of some of the stocks that are on the watch list, but kind of gives you a feel for kind of some of the different types of charts that are out there. And, there's just not a whole lot in things, out there. Disney, we talked about the other day, had a 3-7 crossover, but the consolidation risk was just too high. And it popped for 2 days, but it didn't move a full, 2 average true ranges. It's now pulled back 2 days, just still in that consolidation mode. I'd love to play Disney, but just isn't there. And so, we'll continue to kind of wait things out and see kind of how things play out here, in the market. FedEx pulls back a little bit. We might actually get a bullish signal with it, but gold still consolidating. It's just a lot of things that have been in consolidation simply remain in consolidation, and are showing no signs of changing that consolidation pattern. Or a thing like IBM, big earnings pop, and since then, just absolutely going nowhere. They're on an Intel, very similar, situation there for it. So anyway, that's that's kind of where some things are, and it looks like Powell is speaking right now. I'm seeing some of the comments coming in here so far, but it looks like nothing too dramatic here just yet, but obviously that's going to go on here for for just a little while. Is Powell's testimony. Okay. All right. One thing to note about the reaction to the Fed here so far. If you take a look at bonds, bonds really, are basically where they were before the Fed. What does that tell me? It tells me the Fed is a non-event, right? And I know, the whole market's looking at the Fed going, come on, something's got to get us, something's got to get things going, something's got to get things moving. It's going to be the Fed, and yeah, it could be, right? But if we go look at bonds, at least so far, bonds are kind of saying, it's a non-event. And if we're looking at bonds tomorrow, kind of trading at this exact same level, it will definitely be a signal that it's a non-event. But again, we still have 90 minutes plus tomorrow's hour, for some of the reaction to continue to play on out here. Okay. Interesting. Powell, looks like Powell did comment on global disinflationary pressures, because in the statement by the Fed, um, they talk about inflation kind of hitting their targets and getting up around that 2%. But when we look globally, we are definitely in a deflationary environment, and I know the Fed likes to call it disinflation, and I understand the small difference between the two, but the principles are pretty much the same. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.